why we like the fixed line plays, if you look at the growth catalyst, it's a lot stronger. There's also a more discernible earnings growth catalyst for the sector, basically coming from more affordable broadband connectivity, and the fact that TM is also benefiting somewhat from the rollout of 5G. As mobile operators roll out 5G, they will need to actually fiberize a lot of the base stations. So the key or sole fiber broadband backhaul provider is really TM. Mobile service revenue is basically poised for further recovery. In the previous quarter, that was the third quarter 22, it was up by about 1.6%. This number should continue to grow over the next quarters, really due to a pickup in international travel. We've heard that China have basically ended its zero COVID policy, so there should be an influx of travelers, even migrants coming in from Indonesia and all that over the next 6 months or so. This would basically be quite helpful in terms of driving the much needed recovery in terms of mobile service revenue. We do expect that number to grow by between 2 to 3% this year. Last year was fairly anemic, just 1.2%. That's also because of the soft economy, we have inflationary pressure and all that, so there was a bit of erosion in terms of prepaid ARPU last year. Not forgetting there was also the jaringan pre-Hartin plans that were pushed out by the government, so telcos were at the mercy. Some of these subscribers have since churned out, so we should see some normalization in terms of prepaid ARPUs going forward. 5G population coverage, it's at 47% as of end 2022. This was a number that was reported by DNB recently. There was a bit of controversy there as the new Digital and Communications Minister has adopted that number and has basically asked MCMC to verify. Still, we see very minimal contributions from 5G. As you know, the 4 operators have actually rolled out 5G last November. With the exception of Maxis, of course. Maxis is basically going back to shareholders for approval before they decide to roll out 5G. That shareholder approval itself, the process is ongoing. It should be, a EGM for this should be held over the next couple of weeks. And upon getting that shareholder approval, access agreement will be signed with DNB. And Maxis should be able to roll out by the end of this quarter. The big story last month was the completion of the merger between Celcom and Digi. Legal day one was from 1st of December, so they have officially merged. Unfortunately, the stock code is still dg.com, but I think over the next 3 to 6 months, you see this, changing to Celcom Digi. There will be a brand, common brand coming up, but that's not likely over the next 24 months. So if you're a existing customer of both Celcom and Digi, you will still be latching on your current plans. There will not be a single brand as yet. The indication is that they will only be doing this possibly about 18 months down the road when they have basically sorted out the integration in itself. Integration really is fairly complex. They've got about more than 23,000 sites nationwide to basically consolidate. It would probably involve a consolidation of about 6,000 to 7,000, i.e. they will be looking to trim about 6,000 to 7,000 sites off the portfolio. Some of these sites are strategic sites in itself, so they will have to relook at how to optimize some of these sites for the fact that they will also be returning some spectrum to the regulator over the next 2 years. Integration in itself has started. They have basically called for various RFPs to look at how the network should be dimensioned and all. So like I said, it's a very protracted process in itself. It will take at least 24 to 36 months. So in the meantime, the two brands will coexist. They will be possibly looking at some innovative product harmonization. So I think you expect some joint brands to come over the next couple of months. 5G policy and regulatory risk continue to dampen the sentiment of the sector. New Prime Minister has said that he is basically reviewing the 5G model and network tender process. This is something that recently the Minister of Communications, YB Fahmi Fadzil, has said that a decision by the cabinet will be made sometime this quarter. So don't exactly know what's going to happen there. I mean, DNB is already have already completed close to 50% of the target rollout. They're really in very deep in this whole deployment process already. Telcos in itself have basically 4 of them have basically signed the access agreement. The same parties have also bought stakes in DNB. So I think it's a fairly complex structure in itself already, and unwinding DNB would be very premature at this point in time, and it would basically look bad in terms of the whole structure for the country if that is to be done. I think the next regulatory risk I want to point out is the mandatory standard access pricing. This is basically, the whole structure governs the ceiling prices for access. Will basically be quite important here for TM, because they are one of the biggest access providers here in terms of high-speed broadband. The way this is done is that there is a public inquiry process ongoing where the MCMC is gathering feedback from industry players. The deadline for this has been extended for the second time round. It was originally the 3rd of January. It's been extended for 2 weeks to 17th of this month. Subsequent to the deadline, and after canvassing all the feedback and submissions, MCMC will basically issue a final determination. So we will have to wait for that the final outcome. As it is, if you look at the PI paper that was issued last October, they have basically called for a 41 to 52% decline in HSBA prices for the layer 3. This is for 23 to 25 in terms of the regulatory period. Came quite a surprise to the market, as the MCMC was previously not quite comfortable with retail price conditions. So I guess they were just being a little bit forward-looking in terms of trying to bring down prices further. TM has been fairly vocal on this. They did say that the regulator has failed to incorporate inflationary pressures and higher cost to serve in the excess pricing proposed. They have basically submitted a very strong case, I gather, to the regulator last month. So we just have to wait for the potential outcome. Now, if you assume that, going back to 2018, where TM was, of course, compelled or forced to reduce prices, 10 to 50% decline in EFI ARPU. If you actually indicate that for both FY23 and 24, their core earnings could potentially be hit by between 11 to 20%. The impact on target price is anything between 10 to 50%. So it's a rather big impact on TM if it actually goes against them. I tend to think that this time around the government will be a little bit more rational, so the impact will be quite manageable. Key risks for the sector: regulatory risks, number 1, competition, 2, and negative earnings surprises. So just going back in terms of the call, it's the neutral. We prefer the fixed line business over mobile. TM is our top large cap pick, OSK small cap exposure. I'll stop here for now and pass you on to the next presenter.